Well, it's July and I've got the latest figures and news to share with you to keep you as up to speed as possible on what's happening with the housing market both nationally and locally here in Spokane. My name's Phil Wells, I'm a real estate agent who likes to keep up to date with the market, and I want you to be as informed as possible too. In this video we're going to look at pending home sales, we're going to look at mortgage rates and loan application rates. We'll then look at some real estate news that stood out to me recently, and we'll try piece it all together at the end and try and make sense of it all. So let's get into it. Looking first at pending home sales for existing homes. Just a note on these figures, they are the latest figures available, but they do detail figures from May. So why do we look at pending sales rather than closed sales, you might ask? Well, it takes a while to actually close a transaction. So closed sales in May would represent activity back from March and April time, whereas pending sales in May give us the most up-to-date impression of where the market's heading. Contract signings bounce back month over month, from a decline in April of 4.4% to an increase in May of 8%. Year over year, contract signings jumped 13.1%. I am still hesitant to place any value on year over year figures, given that that was the start of the height of the lockdowns. So just take these year over year figures for what they are. In the West region, the index jumped 10.9% month over month and up 12.5% year over year. So what's driving this increase, you might ask? According to the National Association of Realtors chief economist, the housing market is attracting buyers due to the decline in mortgage rates, which fell below 3%, and the uptick in new listings. New listings is exactly what we need in this market right now. More market listings will appear in the second half of 2021, in part from the winding down of federal mortgage forbearance programs and from more home building. So the obvious question out there in the real estate market right now: are we at the top of the market? Is the bubble about to burst? Is there a crash coming? Well, this economist does touch on this slightly, so let's look at what he's got to say. Home price growth will steadily moderate with increased supply, but a broad and prolonged decline in prices is unlikely. However, if a reduction does occur in some markets, home buyers will view the lower home price as a second chance opportunity to get in on the market. I am tempted to agree with this economist here, but let's explore the issue a little bit further when we've got more information. Now let's move on to look at mortgage rates themselves. As mentioned, mortgage rates have declined slightly. Sticking with May for a second, at the start of May and at the end of May, mortgage rates were pretty steady throughout the month at around 3.1%. I am able to give you up-to-date mortgage rate figures. As of July 9th, when I'm recording this video, mortgage rates were at 3.04%, so a slight decline since the end of May there. So this is a positive sign for continued strong buyer demand. Anything around a 3% rate for a 30-year fixed mortgage is a pretty incredible rate. Sticking with mortgages for a second and looking at mortgage application rates. Doesn't matter what rates are if nobody's applying for a loan. This is a huge leading indicator for the overall housing market. So let's head over to the Mortgage Bankers Association and see what the experts have got to say. Remember, now we're no longer looking at May's figures. The MBA publishes figures weekly, so we're able to get a really up-to-date impression of what the market's doing. Mortgage activity fell for the second week in a row, reaching the lowest level since the beginning of 2020. Even as mortgage rates declined, with the 30-year fixed mortgage rate dropping, both purchase and refinance applications decreased. This is a little bit of a concern. If what the National Association of Realtors chief economist said about prices not going anywhere is true, we're going to need continued strong buyer demand to support the market. This information from the MBA could suggest a slight decrease in buyer demand. I've personally been thinking for a while that as offices reopen and people get back to their pre-pandemic lives, buyer demand is naturally going to wane anyway. It's worth remembering though that a decline in buyer demand is actually pretty welcome. Buyer demand has been at a fever pitch for the last year now, so we could comfortably take a slight reduction in buyer demand and still be in a strong seller's market. I don't think with a slight decline in buyer demand, we're at risk of flipping suddenly into a buyer's market where prices start to freefall. Now, let's try get some further insight into the real estate market by looking at a real estate article or two. Okay, as I always do, I like to take a look at Redfin. Let's take a brief look through what some of the headlines were recently. Housing market update, new listings of homes for sale surpasses 2019 levels. Okay, so the May figures and the sort of June figures were telling us that, inventory was a little bit down, so that's a good positive sign to suggest that inventory is on the way up, which is great. Pending sales slide as new listings reach pre-pandemic levels. Home buying demand slipped below 2020 levels for the first time this year. Home buying demand lets up a bit as prices soar. So again, that really points to the sort of contradiction we've got of slightly reduced buyer demand and increased pricing. I think that really goes to what I was saying about buyer demand might be dropping, but it's dropping from such a high level that we're still in a seller's market. Okay, the article that really stood out to me this month isn't from Redfin, it's from Realtor.com. The housing market shows signs of softening. Has it topped out? I will of course leave a link to this article in the description so you can give it a read too. One of the things that stood out to me on this article straight away is what the chief economist from Moody's Analytics said. The market is topping out. It's starting to show signs of cracking. It feels like we've hit the apex and we're moving to the other side of it. I really do get that sense as well from the research that I've been doing for this video. This article ends with another quote that I think does support the theory that there's still strong buyer demand, even if it's coming down from a really high level. This quote says, "The buyer pool is deep enough to keep the housing market strong. We're not expecting to see it become a buyer's market anytime soon." Now let's look at my local market here in Spokane. Fortunately, we get figures for closed sales really quickly here in Spokane, so I can give you some really valuable up-to-date information. So let's take a quick look at those figures and see how it fits into the national picture. So here in Spokane, we can see that sales are up 5.2%, median home prices are up 28.8%, inventory is down, and new listings are holding steady from where they were last year. Now let's try piece all this information together. We've got an increase in contract signings, we have some evidence of a slight decline in buyer demand, but we still have prices rising. I think if what that economist said from the National Association of Realtors is true about inventory continuing to increase, and if what we read in that article from Realtor.com is true, that the pool of buyers is still strong, then hopefully we will begin to see the market level out and not go too far in one direction to become a buyer's market. With mortgage rates remaining really low, around the 3% rate for a 30-year fixed mortgage, I'm pretty confident that buyer demand is going to remain strong. That's it for this video. I hope you gained from this video. If you did, please leave me a like and subscribe. That really helps me out. If you are in the Spokane area and you're looking at selling your home or buying a home, please reach out to me, give me a call, shoot me a text, send me an email, and I'd be honored to work with you. Like I said, my name is Phil Wells, and until the next one, thank you for watching.